Good day, learners. It's your accounting teacher, Sir AJ, and welcome back to my channel. So, for today, we will be talking about another topic in financial accounting, and this topic is investment in associates. So, if you're now ready to learn about investment in associates, we will start our video lecture. So, as what I've mentioned kanina, we will be talking about investment in associates in accordance with PAS 28. So, what we will be talking about today about investment in associate are number one, introduction and scope of the standard. Number two, we will be talking about significant influence. Number three, we will be talking about equity method and impairment. So, tulad ng sinabi ko, the standard that governs investment in associate ay PAS 28. Ang complete title ng PAS 28 is Investment in Associates and Joint Ventures. So, let's first discuss introduction and scope. So, for the scope of PAS 28, PAS 28 will be applied to all entities that are investors with joint control or significant influence over an investee. So dalawa yan, joint control para yan sa joint venture, significant influence para yan sa investment in associate. We will focus our video tutorial today on significant influence or investment in associate. It does not apply to investment in associates held by venture capital organization, a mutual fund, a unit trust, and a similar entity, including investment-linked insurance funds. Kasi lahat sila are to be governed by PFRS 9 financial instruments. So, we will discuss some key definitions from PAS 28. First is associate. What is an associate? It is an entity over which the investor has significant influence. So, kapag may significant influence ka over another entity, that entity is your associate. So, what is significant influence then? Take note, this is the power to participate in the financial and operating policy decisions of the investee but is not control or joint control of those policies. Kasi if you can control the entity, then you are in a parent subsidiary relationship. That is a different accounting. That is a different standard. Joint control, that is a joint venture. So significant influence, you only have the power to participate in the financial and operating policy decisions of the investee. Mamaya, we will further discuss kung ano ang significant influence. And finally, we will talk about equity method. This is the method of accounting whereby the investment is initially recognized at cost and adjusted thereafter for the post-acquisition change in the investor's share of the investee's net assets. So we will be talking about equity method later on. So next, we will be talking about significant influence. For significant influence, we have what we call the quantitative presumption. Again, this is only a presumption. So number one, if you hold directly or indirectly 20% or more, 20% pataas of the voting power of the associate, unless it can be clearly shown that significant influence does not exist. So kapag ang iyong investment ay 20% pataas, then assumption is associate mo siya. Unless, klaro na wala kang significant influence kasi nga presumption lang siya. Also, if your holding is less than 20%, kunwari 19, 18, etc., the investor will be presumed not to have significant influence unless mapakita na meron pala. So, this is just the presumption. What will override is yung mga qualitative indicators. So, kahit for example, less than 20 yung ating holding, pwedeng may significant influence din. At kapag even though more than 20%, kunwari 25 or 30%, it doesn't mean na automatically may significant influence. Sometimes, wala pa din because of the qualitative indicators. Ang mnemonics natin for this is RPM, PC. So what are these 5 qualitative indicators are representation on the board of directors. P. Participation in the policy-making process. M. Material transactions between the two entities. P. Provision of essential technical information. And C. Changing over of management. So kapag meron kang power or meron kang isa sa limang yan or most of this, then that means meron kang significant influence. So again, the qualitative indicators override the quantitative presumptions. Other considerations. Number one is yung mga potential voting rights. Hindi pa sila voting rights, potential pa lang. The existence of potential voting rights, for example, yung mga share warrants and share call options, must be considered when assessing whether an entity has significant influence, but provided that they are currently exercisable. Kasi pag they are not exercisable, then they should not be taken into account. Number two consideration is yung loss of significant influence. It happens when you lose the power to participate in the financial and operating policy decisions of the investee. It can occur even without the loss of voting power. Kunwari, nagstay pa din at 30% ang iyong voting power, pero nawalan ka ng power to participate in the decision making. Then, mawalan ka pa rin ng significant influence. So let's have an example. X owns 60% of the voting rights of Y. So si X parent ni Y. Z owns 19% of the voting rights of Y. Assumption, hindi siya associate kasi 19. And the remainder dispersed among the public. Z also is the sole supplier of raw materials to Y and has a contract to supply certain expertise regarding the maintenance of Y's equipment. What is the relationship between Z and Y? Although 19% lang yung ownership ni Z, number one, siya ang sole supplier. So meron silang material transactions. Pangalawa, nagbibigay siya ng technical information kay Y. Therefore, investment in associate siya kahit na 19% lang because the qualitative indicator will override the quantitative presumption. So let's now go to the equity method. Initially, pag equity method, we recognize the investment at cost. If the cost is mas mataas sa net share in the fair value of the associate, then meron tayong implicit goodwill. Implicit kasi hindi natin siya i-record. And amortization of this goodwill is not permitted because the goodwill is already included in the cost of the investment. Pag mas mababa naman yung cost, mas mataas yung fair value, meron tayong tinatawag na negative goodwill or gain from bargain purchase. In this case, the gain is recognized as an income in the determination of the entity's share of the associate's profit or loss. So, dinadagdag mo yon sa income mo. Subsequent adjustments, first, pag may profit yung associate, we recognize our share in that profit. So that transaction increases the investment account. Yung journal entry, debit, investment in associate, and credit, share in profit of associate. Take note that you do not recognize the whole profit. Yung share mo lang, kung ilang percent lang. On the other hand, pag may loss si associate, it decreases the investment account kasi may share ka din doon. The journal entries debit, share in loss of the associate at credit, investment in associate. Pangatlo, pag may cash dividends received from associate, it decreases the investment account. Take note, we do not recognize dividend income. Diba normally, when we receive dividends, ang entry natin, debit cash, credit dividend income. Pero for associates, we do not credit dividend income. Instead, we credit investment in associate. And finally, pag may share in OCI of associate, i-recognize natin yun. So pag may credit balance yung OCI, dagdag yun sa investment account. At pag may debit balance ang OCI ng associate, bawas yun sa investment account. How about adjustments to the investee's profit or loss? So, 'di ba, we recognize yung share natin sa profit or loss niya. Meron bang kailangang i-adjust doon? Meron. Number one, additional depreciation in case na yung fair value ng depreciable asset ay mas mataas sa kanilang carrying amount. Because remember, when we recognize the cost, we recognize the fair value ng mga assets. So, pag mas mataas yung fair value ng depreciable asset, ibig sabihin kulang yung depreciation natin kapag fair value yung basis. So yung additional depreciation ay i-recognize mo at bawas yon sa profit or loss because additional depreciation expense. Pangalawa, additional cost of sales in case the fair value ng inventory ay mas mataas sa carrying amount niya at the time the investment was acquired. Dahil additional cost of sales to, bawas din to sa profit kasi cost of sales is a deduction from sales. And finally, pag may dividends on cumulative preference shares pala. Pag cumulative yung preference shares, i-minus na natin yung dividends whether declared or not kasi sure tayo babayaran yan. Pero pag non-cumulative, only when they are declared. Bakit natin to mina-minus, sir? Because in giving dividends, yung mga preference shareholders are given dividends first. So they are preferred. Kaya mina-minus natin kasi technically, galing yun sa profit or loss yung ibabayad sa kanila. So let's have an example. On January 1, 2020, Badang Company purchased 25% interest in the ordinary shares of Brody Company for 8 million. So ito yung cost, 8 million. Brody's assets and liabilities approximate their fair values except for inventories with carrying amount of 2 million pero ang fair value daw 400,000 lang. And depreciable asset with carrying amount of 12 million tapos ang fair value 20 million. The remaining useful life of the depreciable asset is 10 years. Brody's net assets has a book value of 20 million. On December 31, Brody reported 4,800,000 profit and declared and paid dividends of 2 million pesos. So the first thing that we need to do is compute for the goodwill that is subsumed in the carrying amount of the investment. Una, yung cost ay 8 million. Then, how much is our share in the fair value of net assets? So, before we compute our share, i-compute muna natin yung fair value. So, di ba yung book value, 20 million? Tapos, yung inventory daw, ang fair value niya 2 million, pero, ang carrying amount niya ay 2 million, pero ang fair value niya 400,000 lang. So, sobra yung carrying amount. So, bawasan natin ng 1,600,000 to get the fair value. For the depreciable asset naman, kulang yung book value niya. So, undervaluation of 8 million. So, ang fair value natin total ay 26,400,000. But take note, we only get our share, which is 25%. So, ang fair value of net assets na share lang natin ay 6,600,000. Therefore, ang implicit goodwill ay 1,400,000. Take note that this goodwill is not recorded kasi po nandun na yan sa cost which is the 8 million pesos. How much is our net share in the profit or loss of the associate or the investment income in 2020? Take note that the profit for the year is 4,800,000. Ano ang mga magiging adjustments? Una, yung cost of sales. But take note, hindi siya additional. Kasi yung fair value mas mababa. So, yung cost of sales sobra. So, reduction in the cost of sales, 1,600,000. Dahil babawasan natin yung cost of sales, dagdag yan sa profit. This time, additional depreciation of 8 million. Pero, 10 years kasi yung life, so ang depreciation lang for the year na i-add natin ay 800,000. Bakit siya minus? Kasi dadagdagan natin ang depreciation expense. So, minus 800,000. So, the adjusted profit is 5,600,000. And to get the share of the investor of 25%, our share there is 1,400,000 pesos as well. The third question for this practice problem is how much is the carrying amount of the investment on December 31, 2020? So to compute that, first, yung initial cost ng investment natin is 8 million. We add the share in profit of associate, 1,400,000. And we deduct yung dividends received. Pero take note, 25% lang ng 2 million, that's 500,000. Therefore, the carrying amount of the investment on December 31 is 8,900,000 pesos. So to show you the journal entries, nung January 1, nung binili mo yung investment, debit investment in associate 8 million, credit cash 8 million. Nung December 31, for your share in profit, debit investment in associate 1,400,000 at credit share in profit 1,400,000. For the dividends received, debit cash 500,000 and credit investment in associate 500,000 pesos. So let's go to some other considerations. First, yung continuing losses. Kapag continuing yung losses ng investee, the investor discontinues recognizing its share of further losses when the carrying amount of the investment is already zero. So hindi mo na pwedeng gawing negative. Then, if the associate subsequently reports profits, the investor resumes recognizing its share of those profits only after yung profit na share mo is equal to the share of the losses that have not been recognized. So, di ba nag-stop ka na nung zero na yung value? So, meron pang mga losses na hindi mo na-recognize just because zero na kasi. So, pag nagka-profit, kailan ka mag-start mag-recognize ng share? Kapag na-offset na yung mga losses na hindi mo na-recognize before. Okay? Number 2 is for intercompany transactions. Unrealized profits resulting from upstream, ibig sabihin from associate papunta sa investor, and downstream investor to associate transaction should be eliminated only to the extent of the investor's interest in the associate. Yung percentage mo lang. If it has not yet been sold to an unrelated party. So, binabawas natin yung mga unrealized profits or losses. And then we add the realized profits and losses once the asset is sold to an unrelated party or if the asset is being consumed through depreciation. Let's have an example for intercompany transaction. Lila Company owns 20% of Mia Company's outstanding ordinary shares. On January 1, 2020, Lila sold an equipment with a carrying amount of 400,000 and a remaining useful life of 10 years for 480,000 pesos. Gain of 80,000 was recorded by Lila. Both Lila and Mia used the straight line method of depreciation. So this is an example of a downstream, no? Kasi from Lila, the investor, to Mia, yung transaction, downstream to. So pag downstream, what will happen is on January 1, 2020, mag-recognize tayo ng gain on sale. Pero yung 80,000 na gain on sale, itatanggalin natin yung unrealized, which is only to the extent of our percentage. So, debit gain on sale, that is 80,000 times 20%, that's 16,000. At credit investment in associate, 16,000. Take note, dinebit natin yung gain on sale kasi we eliminate the unrealized gain or unrealized profit. Kasi nga, binenta mo sa associate mo. But on December 31, since nagagamit siya for 10 years, so yung 16,000 na ineliminate mo, dahan-dahan siyang maging gain every year for the next 10 years. So ang entry on December 31 is debit investment in associate 1,600, credit gain on sale 1,600 to recognize the realized gain. The net effect on the investment, take note, no, nag-credit tayo ng 16,000 tas nag-debit tayo ng 1,600. Ang net effect ay 14,400 deduct. So, what if upstream naman to? Assuming lang si associate ang nag-record ng gain. So, ang i-eliminate ni investor is yung share niya sa profit. So, ang entry natin is yung unrealized gain, 80,000 times 20%, 16. Tapos, magkaka-realized gain na 1,600. Ang adjustment sa share in profit ay 14,400. So, ang entry medyo iba kasi wala ka namang ni-record na gain on sale. So, ang entry mo ay Debit share in profit, 14,400. At credit investment in associate, 14,400. Take note that the net effect on investment is also 14,400. So same ang net effect niya kapag downstream or upstream. The only difference is yung sa mga journal entries. Number three, what if yung associate mo achieved in stages? Ibig sabihin dati less than 20 tapos dahan-dahan naging more than 20%. Previously held interest shall be remeasured to fair value on the date the investor gains significant influence. So, yung previously held interest mo measure at fair value. If merong difference between the fair value and the carrying amount, recognize it in profit or loss. Tapos, yung cost mo ngayon is the fair value nung previously held interest plus yung binayad mo today. So, yun yung total cost na i-recognize mo sa investment in associate. Any cumulative unrealized gain or loss as OCI of previously held interest shall be reclassified to retained earnings. And finally, cessation of equity method. Kailan to mangyayari? When significant influence is lost. The difference between the selling price and the carrying amount shall be recognized in profit or loss. The retained investment, if ever meron, shall be accounted for under PFRS 9 and shall be remeasured to fair value. And the changes or the difference recognized in profit or loss. Finally, do we impair the investment account? Yes, because goodwill forms part of the carrying amount of the net investment in an associate, it is not tested for impairment separately. But the entire carrying amount of the investment is tested for impairment in accordance with PAS 36. Remember PAS 36, when will there be impairment? When the carrying amount is greater than recoverable amount. Recoverable amount is the higher between value in use and fair value less cost to sell. Let's have an example. On January 1, 2020, Sabre Company gained significant influence over Nana Company by acquiring 25% of the shares of Nana for 100,000. Nana's profit for the year is 60,000. Declared cash dividends of 100,000. Recoverable amount of the investment is 75,000 on December 31. Question is, how much is the impairment loss? So, computing muna natin yung carrying amount. The initial cost is 100,000. Tapos yung share in profit, madadagdag yan. 60,000 times 25%, that's 15,000. Yung dividends, babawasan natin sa carrying amount. So, that's 100,000 times 25%. That's deduction of 25,000. Therefore, the carrying amount on December 31 is 90,000. However, the recoverable amount is only 75. It is lower. Therefore, there is impairment of 15,000 pesos. The entry is debit impairment loss, 15,000, and credit investment in associate, 15,000 to record the impairment of the asset. So, after this entry, ang investment na lang ay 75,000 pesos. So that would be all for today. Now it's your time to test your knowledge. If you know the answers to these questions, type your answer sa comment section. Question number 1, which statement is incorrect concerning the equity method? Letter A, the investment in associate is initially recorded at cost. Letter B, the investment in associate is increased or decreased by the investor's share of the profit or loss of the investee after the date of acquisition. Letter C, the investor's share of the profit or loss of the investee is recognized in the investor's profit or loss. Or D, distributions received from the investee do not reduce the carrying amount of the investment. And question number 2, on January 2, 2020, Alucard Company purchased 20,000 shares, 20% of Roger Company's ordinary share for 4,500,000. During 2020, Roger reported the following in its statement of comprehensive income: a 4 million net income and a 500,000 unrealized gain from its investment at FVOCI. Roger Company paid cash dividends of 3 million on December 31, 2020. What is the carrying value of the investment as of December 31, 2020? A, 4,300,000. B, 4,600,000. C, 4,700,000. Or D, 4,800,000 pesos. So comment your answers down below and explain your process so that I may reply kung naging tama ang process niyo. So thank you very much for listening and watching to this video lecture, guys. If you have questions, you may message me sa aking mga social media accounts. Like, comment, share this video. And if nakakalimutan nyo pa, don't forget to subscribe to my channel and hit that notification bell para ma-notify kayo if meron akong mga bagong pinopost na video. So that would be all for today. Thank you very much. Don't forget that every day is an opportunity to learn something new. So that would be all. Thank you very much. See you on my next video. Bye!